Hello, and thank you for taking the time to check out this video. I'm obviously a futures trader from the EasyAlgo Discord community, and after some of the mentors had left not too long ago, I felt the need to kind of give back because I've learned so much in this community, and I'd really like to kind of share whatever kind of content that I can. And for the time being, my internet's kind of slow where I live. So I'm just planning on making some videos and sharing some of my strategies and things to just kind of add more content to the community. And I'm actually really excited to see some of the comments that some of you guys might leave for me or the messages you might send me in the Discord, so I can learn from you. Because I don't at all consider myself able to be compared to some of the other mentors, the ones that left or the ones that are still there. So I'm just here to kind of help however I can. But I do understand the basics, and I prefer to use indicator X and TDIX. For some reason, I have issues with trend X, I suppose. For me as a person, I don't like trading narrow pivots that much. It appeals to me, but I feel so much more comfortable using the indicator X and TDIX system. So I want to kind of share all the things I know, and it's going to take some time. As you know, it takes so much time just to learn about things and to learn about crypto and how to get into trading. And you know, you can kind of look at other people and try to take trades if they give you signals, but it's not really going to do you any good in the long run, because it's so true that like you have to learn like what works for you. There's so many indicators you can use, you know, and so many different ways to trade them. But what I like the most out of everything in EasyAlgo is TDIX, and I don't trade without it. So I guess that's what I'll be talking about here, and maybe a little bit of indicator X, but I'll try to save that for another video. And then maybe as I get better at this, you know, feeling more comfortable sharing things in these videos, then maybe I'll kind of go over these things and refine them. But I think I already partially understand what some of the mentors might have went through, or Seth might have went through when he was teaching in the videos, because there's so many different things that need to be said, and it's kind of hard to know where to start and to, you know, to cover all the bases. So you kind of have to plan it and just kind of take, you know, a calculated approach to this to even explain it. So just to kind of get started in this video, I'm using some other indicators here. They're just kind of grayed out because I turn them on and off. But my main ones that I have on that I want to go over is TDIX and the TDIX buy sell overlay. And you'll see some lines on here on my candles. And I just like to use some of these indicators like TDIX just for the divergences, so it paints them on, so I don't miss them. And then I use this trading toolkit by Big Beluga that Crypto Crisp used, and I looked at it and I was like, well, this is kind of cool. So sometimes it'll show me divergences that I might not have noticed, or I can quickly see them like this. And I don't even look at this oscillator down here. I just keep it minimized. But when I have the settings set, like I have the boxes turned off and the lines turned off, and then I just use it for divergences, and it helps me to see things quickly. And so when I think of like price and how it moves up and down with every candle and every little like local high and low, every swing high and low, I think of it as momentum in a way, because like the price is moving because people are like, just buying and selling, or different things are occurring. But it seems like my internet's a little laggy right now. But when I think of it this way, as the price goes up and down, you'll have like your moving averages, like your fast MA, your slow MA. You got your money flow, you got your Bollinger Bands. Those aren't moving averages, but then you also have like EMAs, SMAs. And as price moves, and the price starts to average out, like you have this momentum. And that's really like the way I like to trade. I tried to trade levels, and sometimes I've done all right with it, but I don't want to say I've been unlucky, but sometimes trading levels is just the best way to go, but it's not the way I prefer to trade. I like to trade the momentum. So I use TDIX. I use moving averages. I like to see divergences for when there's pressure building up, and divergences obviously don't play out immediately all the time, but they often play out pretty nicely when they've been delayed, and then they finally do play out. So yeah, about TDIX, obviously you can look in the beginner videos that Seth's put out. But I'm just going to share with you like the way I look at it. When I look at it, when I first look at it, I look at the money flow. Let's say like a different chart. I was looking at this not too long ago. And because it's just one of those things like that I'll see that has divergences, and they pop right out, but you won't get them painted on the chart. You have to see them yourself. So like I made my first video about this, and this is like one of my favorite ways to trade, is I'll see the divergence like with the money flow. So you know what this money flow is, obviously. This wave that turns from green to red, red to green. And but then when you see like these divergences, they often mark little bottoms, even on low time frames. And I know that when a money flow divergence starts to play out, I can enter that trade with confidence, not just on the divergence, but when I have some other confluence as well. So yeah, like in short, my entire first video on my YouTube channel was about this. And just to rehash, excuse me. When I see the divergence, because it just pops right out, and you have to see this with your eyes, because like these other ones, like you have a divergence here on your fast MA, a divergence here, but they didn't play out. But the money flow divergences typically do play out. And sometimes they even get pushed down one more time and then they play out. But typically when they get closer to the 50 line on the TDIX scale, they have no choice but to play out. And you don't want to enter the trade like when the middle band crosses. That's too late. You want to like always enter like on the last hump as it gets closer to the middle band and the last crossover of the fast MA from the middle band of the money flow. And there are ways to tell, to have a really good informed guess of when this last one is going to occur, instead of it just kind of going like that. And then, but if you would have entered like right here, like this would have been choice. And this is very consistent on all time frames. Of course, the bigger time frames are bigger moves. But so in this case, this is kind of like momentum, but it's being delayed because when moving averages, like which kind of shows you the momentum averaged out, when the moving averages like become resistance and the price starts to get rejected on them, or support in different cases, but like as like these moving averages were resistance and it kept pushing the price down, it like delayed the divergence from playing out. But eventually, like the divergence was going to build up so much pressure that it was just going to play out. And when it popped above, and these moving averages that were resistance became support one by one, and gave it the strength to kind of like push through the next higher moving average. So that's one of the first things I look for when I look at TDIX, because it's so easy to spot these. And here's another one. I mean, they're all over the place. I think they're better when it's all one big hump, because when it goes up a little bit into the green, like in this case, in the bullish case, it doesn't have as much pressure built. But like here, the money flow came up while the price went down, but then like the money flow was way up here when this fast MA crossed over. And you could even went here and checked it, or like even if you were like kind of delayed on it, but at that point it really wasn't. Like here it was a divergence, or like right here, but then like here, like it was still kind of like flipping on the money flow in a way, and the moving averages. So that's my main thing, how I like to trade those. But obviously, like when you use TDIX, like there's so many things you can do with it, and that's what makes it great. It's kind of busy when you have everything turned on, but I don't mind that, because like when I look to enter trades and exit, I start zooming in. I'm looking at candles, I'm looking at the candle body, I'm looking for like little hammer candles and dojis and stuff like that. So once I zoom in, all this gets zoomed in, and it's not so bad. And obviously, your fast MA, this white line in my case, the way I have it colored, is going to be, the most jagged, and it's going to move up and down the fastest because it's the fast MA. And that's how you get your shark fins, when it goes obviously beyond the Bollinger Bands. But sometimes, like, you don't always want to enter on a shark fin, because like it might not have went above some moving averages. In some cases it does, but you still don't want to enter. But until you start getting some crossovers and things, like it might not be ready to play out. Like these moving averages may be support, and it's kind of like starting to build divergences before it's ready to come back down, before these MAs start to flip. So there's all this like dynamic support and resistance going on behind the scenes. And if you don't have a moving average ribbon turned on, you're not going to see this. So you might think, oh, well, here's a shark fin. I entered, but I didn't get a very big move. Well, that is going to happen. And you're going to have divergences. Stuff's not always going to play out, like especially when you're on like low time frames. The lower the time frame, the more likely you are to get some signal that's just not going to play out immediately. And you should never really just enter a trade on a divergence alone. You need more confluence. So not only would you want a divergence, but it's nice to see the money flow going down if the price was going up, if you can see that. And like in this case, like on the final hump going down, you had the fast MA cross down, and that could have been a pretty good entry somewhere right around here. But like what you can do, what I like to do is I use the slow MA, and a lot of the times, like I won't enter the trade until the slow MA or fast MA crosses the slow MA. Or like sometimes like the fast MA is kind of like bouncing off, and it doesn't confirm a cross of the slow MA like this down here at the bottom. But here it confirmed it. And it may feel like, oh, I'm getting in late, but not really. And getting in a little bit late isn't really a big deal, like as long as you have like a good confirmation. So this crossed here and even was like ready to cross this middle line at that point. Like by the next click, it was going over this middle band. But you'll see this a lot. Some people won't take any trades with TDIX unless there's a super shark fin. But I don't trade that way. I will use like any kind of like shark fin, but it depends like on the other types of confluence. Like when you look at something like this, you see this all the time. Like here's a shark fin, and it turned out really good. Oftentimes when you get like a shark fin in kind of like a corresponding money flow color, like if this is a bullish shark fin and you're seeing green money flow, you often get big moves. Like in this case though, it didn't play out, but then it built a divergence and then it came down like one more time and then that one played out. But even if you entered here or here, you didn't really like get in the red too much. But you can take, obviously, take these if the higher time frame sentiment is bullish, and then you take like this low time frame shark fin, it will probably do you well. And nothing's, like Seth says, nothing's 100%. And you have to understand that it is a game of probabilities. So yeah, I'll see this all the time, like with these money flow divergences. They just pop right out. Like money flow is coming up, price is coming down. Like, oh, there's an easy trade. Like, and I know that I can ride that trade further than indicator X. Like a lot of times I'll like close the trade when the price gets to indicator X. So this didn't go that far back, but in some cases, here's another one, a money flow divergence. But like you might want to say, okay, enter a trade here and then just take profit at this line, which is how Seth teaches you, and you can't go wrong doing that. It's safe. But it's often like a lot of time that you put in to wait for a trade opportunity that you want to wait and hold your trade a little longer than just closing it out at the value line for indicator X. But you can, just to kind of touch on that before I talk about that more in a different video, you'll see like the price sometimes will reject on the value line on indicator X. It'll often work as support or resistance. Like right here, it started becoming support and then the price went up. So you can just watch it a little bit as it goes through. And if it looks like, it's going to make it through the value line, well, you're probably all right to, wait and see if price goes up to like the next liquidity line, wherever it might have been. Like in this case, it did eventually get all the way up there before having a dip. So I would use, because I love these liquidity lines, by the way, but I would use the MAs. And Seth did mention that in one of his videos. He said you could pair it with moving averages, and it really helps. It makes a big difference. Like in this case, you had the shark fin, but the moving averages were still going down and they hadn't flipped yet. So anyway, other things about this is, I'll just leave that on, but this whole entire Bollinger Band, I like that. This is weird, but I kind of think of it as like a big worm, I guess, kind of going up and down. Let's do this. Between the oversold or overbought and oversold. And you'll notice that, everything goes up and down. The price goes up and down. The oscillators go up and down. Even volatility on indicators go up and down. Everything's got to go up and down. And, it's not always going to go to the bottom after it's been to the top. It might go halfway down and then go back up to the top again. But it's more likely that if you get in at a deeper point, like, yeah, you're probably going to have a way better move, a better chance, or you're getting close to that bottom. Like in this case, you had money flow coming way down. The Bollinger Bands were way down. And when you hold your cursor on here and you see the line, like when you look at the scale, you'll start to notice these numbers and how significant they are, like on TDIX. Like, I mean, this just is so golden, like how TDIX works and how it just, if you know these things and start to pick up on them, once you start getting like the fast MA above the 50 line and around the 60, you're more likely to start seeing bigger candles, like, and kind of like more momentum as the strength of the trend is higher. And the scale could be reflecting that, but I think there's a little more to it than that. I think because not only does it just get bigger when it's going up, but it does the same when it's going down, when it starts dipping below. In many cases, like when the lower it gets, like the faster it'll go down. But you'll obviously see like sometimes big candles out of nowhere that may not have went over the 50 line, and it was like a big bullish candle, but you'll have that. And it's something to kind of watch out for, because oftentimes like big moves that come out of nowhere are often fake moves. So you want to make sure like things support it, which I'll make another video hopefully in the future, not too long from now, about volume. And this really helps. Like, I think a lot of people don't really know how to use this, and I didn't know how to use it for a long time, but I started just kind of watching videos on it, and then reading about it and seeing Levicar talk about it, and it's really helped me. So this can help you kind of be careful not to get into a false move, because the volume is going to kind of confirm that, as well as another confluence. So yeah, TDIX, it's really all about momentum. I mean, obviously when you're in a trade and you're sitting there waiting, let's say you entered a short up here somewhere, like it's going to take time for it to play out. Like as printing, at first, when I first started trading, I was like, well, I look back on the charts and I back test, and I'm like, oh, like there's a bounce here, or there's a dump here, or whatever. And I would sit and watch it, and it would toy with me, as it has these little ups and downs. But later I started to learn to trust the TA after I did so much back testing, and it gave me the patience to sit and wait, like for however long it takes. Like in this case, like maybe, you've seen this divergence, price going up, money flow going down, even like the RSI, or the fast MA, going down while the price went up. And let's say you entered the trade around here and you were safe about it, and you waited for like a confirmation, yet fast MA going below the middle band, and even like these moving averages crossing like bearishly. Even here, like you could have entered here where it flipped to bearish. But like say like it was going down, like you can kind of just use these moving averages as well to like know when to get to like close your trade. Or what I find, even without these moving averages, let's say if you entered a trade up like here because you've seen this fast MA try to get above the middle band and it got rejected right here, that's often a sign that it's just going to dump again. But I often feel like I'm blind without moving averages, because like they show you so much. But when you see this, like, and you're in a trade and you're like, okay, I'm in the profit here. Maybe, maybe you had your Oh, I gotta set my look back thing on indicator X further. Let me just do that real quick. Let's just do this. It's probably gonna lag, but oh, that wasn't too bad. So like if you entered a short like here somewhere, or even up here, and then you just kind of wrote it, you could have took profit on like one of these bars, like or when like there was an opposing shark fin. But like what I like to do too is like, okay, I'm in profit, or like in this case, I'm in profit, and then a big dump candle happens. And I know that usually after one of these like bigger candles going down or up, there's usually going to be a bounce. When you see a big quick move like that, it almost always hits something and something stops it. So when you get down here and you're like, oop, I'm in the profit pretty nice all of a sudden, will the price keep going down? No, it might a little more, but it also could just bounce up really quick against you. So like if you can and you see that, just cut it. Take your profit. That's what I like to do. And then just because you get pretty max profit when you do that. And then like you're ready for the next trade. So I like to scalp with this. And I guess this is kind of good. I think I covered most of the things for this video. Yeah, so it's all about momentum with this. When I trade, yeah, this is what I wanted to say. When I trade with TDIX, I don't really need to plot out levels. I mean, in many cases, I don't even need trend X. You've got your liquidity lines and their choice. And you'll see, price going after liquidity. And you'll notice like if price is in an uptrend, there's going to like be liquidity lines like that just keep getting printed below as price is just going up after the liquidity above. And like it's on a rampage, like going for that liquidity. And the more like liquidity lines you see on one side, it kind of, I think, indicates, a strong trend. But then like obviously when you're ranging, like the liquidity on both sides is going to be taken out continually. So yeah, that's pretty much it for this video. There's so many ways to use this. I hope this was helpful. This was really just basics and just kind of, I guess, kind of me just saying like, yeah, I'm going to start making content. I think it can help. I'll share more stuff that I don't think a lot of people are aware of, and I look at things differently here. And I've kind of over time developed my own personal way of trading. But ultimately, if you haven't went through all the training videos that are available to you and in the Easy Algo community, you need to do that. Because if you don't do that, you're not going to understand. And at that point, nobody can really help you. So you got to do the work, because trading can be work. It definitely is, especially while you're learning. You've got to do the work. You've got to learn, and then you'll understand more of what people are talking about when they're trying to help you. And in my case, I'm saying this from experience because I've been pretty dense, and I wanted to jump into trades. I didn't want to take the time to back test in the past, like, or, do the studying and look at things, and watch the training videos and pause them when you get up to do something else, and then just resume back at that when you get back to having enough focus to watch the videos and pay attention to what Seth is saying in them. So yeah, that's really key, is going through all those. And then on top of that, you start to listen to, people like me, or other people, really other people, because they're all probably more experienced than me. But I suppose I do all right now because like I was able to get rid of my day job. I still have like a lawn care business that I enjoy, and I only do that a little bit per week. But trading is now like my main thing, and I enjoy it. It doesn't really take much money to pay my bills, so I don't feel the need to try to trade every reversal. Um, yeah, and I don't often like I post my P&Ls, but I will start doing that more. And I'm happy to take 20%, 30% base hits, 50%, 70. And if I ever get like when I do sometimes get like at 100% profit in a trade, I'll usually cut it because yeah, it would be nice to get 200, 300%, but I like to just take it when I think it's max for that moment, and then I'll have more to trade with when I enter my next trade. And with that being said, people keep in mind, like if you use more leverage, you're risking a lot more. Your liquidation is going to be closer. You really don't need that much. I actually started with a medium to high leverage, and I just got smoked, and it was rough. It was stressful, and you don't want that stress when you're trading. Like even if you traded with like 2x leverage to like experiment, well, um, I found that I could do pretty good with 2, 3x, 4x because I wasn't feeling the stress as much. And if I lost, it wasn't as much. So I was like, okay, I learned a lesson. I lost a few dollars, whatever. But now like 10x is my default. And if I'm feeling really froggy and confident in the trade, I might go to 15. But you should never really go with higher leverage until you can be profitable with small amounts of money. This is all common sense. It should be. Because I know a lot of people that, you can get FOMO if you're on YouTube watching YouTube videos of some of the people that are on there posting like how they get all this money and these big gains. And yeah, people are going to do that. And there's always going to be somebody showing you how great of a trader they are, and that's great, good for them. That's their time, that's their moment. But your challenge may just be being profitable or making enough money to pay your weekly bills or something. So yeah, keep that in mind. And thanks for taking the time to listen to this message, and I'm excited about making more in the near future.